And I believe that we're back, my dear friends. Morpheus in the house. Super excited to start this week with you with banging PMIs. This is something that's going to be happening in a little bit, just like usually. The chats are open. I am certainly super excited to share any kind of thoughts, ideas that will make sure that you're trading into profit, and that you're doing it on a stable basis. Chats are open. Ask your questions. If you're, maybe shy a little bit about asking them live, let's make sure that you kind of get your privacy, get your answers in more one-on-one basis. You're certainly able to do that in the Telegram channel below. So hit me up later, leave a comment in the videos about the topic or essentially about anything else that you want. I'm always going to be very, very happy to clarify any kind of thoughts, ideas that you might have about independent living. Let's make sure that your money works for you instead of the other way around, instead of you working for the money. All right, so let's see. Let's go to our, there we go. Let's go to our wonderful platform, Pocket Option. Once again, this is not pre-recorded. Link to Pocket Option is below. You're quite capable of doing this right now. It's checking, right, on my validity, right, on my truth, what I'm saying, and that's actually kind of important. Don't trust anybody outright just based on their words. You don't know me. I'm some guy on TV. Um, I think that we might have. I think that we might have technical difficulties. I don't know. All right. So I'm on Twitch. I'm on YouTube. It seems like, well, it seems like I'm on YouTube. It's fine. Maybe right now there might be some issues with Twitch. But anyways, let's once again still get through this. I still think that this is, going to be very exciting today because when we take a look at economic calendar. See, there we go. We click on this little arrow right here. We get it all for 1 week. And in 7 minutes, yeah, baby, we're going to get it with France. And about 15 minutes later, we're going to get it with Germany. Very, very cool. And at 11 o'clock, we're going to hit this up as well. Manufacturing PMI for Europe. And I think we're going to try to do it for the GBP as well. So you and I are going to be here today for quite some time. Once again, would love for this not to be a monologue. Well, as I mentioned, yeah, this is something over the past, weeks or, I don't know, maybe almost a month now, we're doing stream every single day, every single weekday. And we're constantly improving, increasing our balance. We're constantly making money. As I mentioned, this is done live. I cannot, I don't know, fake this, right? So you're quite, once again, you're quite able to click on Pocket Option link below. You don't need to deposit, like, your real money, essentially. You do have access to the demo account. Demo account has same, um, demo account has same graph, right? So it's not like, you'll be trading on one, on different graphs and do great on one but crappy on the other. The charts are identical to, across the board. So you do, this is not really, this is going to be the same in, real account. This is going to be the same in the demo account, and this is going to be the same in tournaments. Actually, I remember, I think that when you do make the first deposit, you get, don't need to spend it. But when you do make your first deposit, like 50 bucks or something, you do get access to tournaments. The button's like right there, right? It's, right here. And you can actually participate, and without any risk to your finances, you can participate every single day in the daily tournament. And if you lose, you don't lose anything, but if you win real money, right? So 50 bucks, $75, and first place gets 125. If out of, and one of the videos in the past, I did show you how to win tournaments, right? So there's a particular strategy where you open up a position every single minute, and it's only a matter of time that if you start early enough that you actually get to that point. Interesting enough is that I know that these videos are shown in countries where like $500 is actually something that's manageable to live on comfortably, not lavishly, but comfortably. To rent apartment, buy food, maybe transportation for to get to and from work. This as a side income is fantastic. All right, so you get 30 opportunities each month, every single day. So if you, for example, get like 4 or 5 wins, all right, in a month. That's great. Still, you're gonna have like 2, 3, 4, $500. That's awesome. I mean, that's essentially what I encourage as well for you to test this. The things that we discuss. If certain questions arise, of course, reach out to me. Morpheus is gonna be in the house. The doctor will see you. The doctor of finances. All right, so let's take a look. All right, so we got less than 4 minutes, right? 3.5 minutes from now, we're going to have French manufacturing and services PMIs. What the hell is a PMI, you say? It's Purchasing Managers Index. All right, so when we take into consideration the country as a whole, there's lots of businesses. Businesses have Purchasing Managers Index, or I'm sorry, Purchasing Managers. And this index reflects their kind of demand on their business, right? So if you got a factory that produces refrigerators, right, and you understand you have an order for 50 refrigerators, you're not gonna order, I don't know, 100, million tons of steel and plastic and components because you got 50 fridges to go out, right? So this is based on supply and demand. And this essentially kind of shows us money expenditure, but from the producer side, right from producers. Purchasing manager will order raw materials for their, I don't know, goods and services, and based on demand. If people are not spending money, there is no demand. They're not going to order a lot. The factories that produce raw materials are also not going to see a lot of demand. And maybe there's going to be firing of people because if you got, at your busiest, you hired, I don't know, 1,000 people to work at your factory to chip away at a stone to get like, I don't know, granite or, I don't know, marble, and all of a sudden nobody is asking for this, you're not going to keep these people on a salary. All right, and essentially what's going to happen is that you're going to say, goodbye, and this is going to, kind of have a ripple effect because if people don't have salaries, they can't spend money, right? So they're going to go into savings mode, and the economy is going to start deflating really quickly. And at that point, the central bank might see this as a signal to lower interest rates to prompt people to borrow money, right? You got fired, boo-hoo. But at some point you're like, oh, holy crap. I mean, the interest rates are really low. I can go to the bank, ask for money, and start my own business doing something else, right? It's all about really how you kind of view this. Maybe this is going to be an opportunity for you to get your business going, right? Or, essentially you could never borrow money to trade on, leveraged instruments. It's way too big a stress. We do talk about this occasionally, and this is very important to kind of keep in mind. But we'll come back to this in 1 minute. All right, so what do we got? We're going to have, let's kind of close a bunch of these OTCs. We got euro dollar, baby. Man, 69%. Don't really dig that. And because it's not really a staggering statistic. Yeah, France is the second most, the biggest economy in Eurozone. Right, in 35 seconds, yeah, we got it right here. So there should be a reaction. We see already a bit of volatility. I'm not doing pending trades by asset. I've done that in the previous couple of videos. And the reason is that I don't expect this to be a huge movement. I'm expecting maybe a candle like this, right? Something on this kind of level. But it's not, if we kind of calculate very quickly, right? 1506, 10 pip movement. Yeah, so there we go. Now let's see. There's a spike. Whoa. Oh, no. I'm missing it. Yeah, no, I missed it. All right, so there was a spike. There should be a retracement. Actually, it opened with a gap. It opened with a big gap. All right, let's see what the heck is going on here. All right, so it was forecast 48.9. All right, came out lower. So euro should be going down with regards to manufacturing PMI, and that's actually very unfortunate considering that Europe is usually and services PMIs, right? So there's decline in orders of raw materials from the purchasing, kind of managers. And yeah, I think that if I'm gonna, I opened it very, very late. I don't know, maybe I didn't really see I opened with the gap, and I didn't really see uh, that it went green again. It was kind of weird, right? So it opened here and immediately went for a retracement. Now, let's explain what the heck the gap is. The asset does not move linearly, all right? So it does not move 1, 2, 3, 4, right? I mean, imagine this, right? Right here, right? We got 15,006. Now, it doesn't go 15,006, but then to 15,007, 15,008, 15,009. It can go 1, 2, 5, 7, 10, right? So depending on how many people are buying at this very moment, it does have this kind of ability to jump over, right? The supply and demand to shift very aggressively, right? So this is kind of just something that you just need to keep in mind. Spike happened, retracement happened right after. I mean, that's exactly what we saw right there. Usually it's done in the same minute, and in about 15 minutes from now, we're going to have a repeat with a bigger economy in Eurozone, which is Germany. All right, so let's take a look, right? We got 1491. And I don't know, let's say the top one. Actually, let's go for like really the lowest, 1491. Yeah, and it went up to the retracement rate for 1500. So 91 to 00, that's 9 pips, right? Exactly what I called it. It was, it wasn't going to be something huge. That's why I didn't do pending trades, because imagine this. If I opened a 4 pip difference, right, it would have been around here and like here. So this spike technically, well, yeah, I would have lost money on both because it actually closed between, right? So if we assume that the asset went linearly, and let's actually kind of calculate this exactly, right? We got 1499, so 4 pips would have been 1494, right? So it would have been here somewhere, right? 1494. And then also what would have been here, so it spiked, right? It would have opened the position, but it closed between. So technically I would have lost, this position with pending trades, where you kind of select this by the asset. The reason why I usually do this with like 4 pips, well, because it's, to do the 2 pip is really, really small. Right before the release of this statistic, there could be a bit of volatility, and I'll explain now in just a second. So, if it kind of like right before, right, like 10 seconds or so, we set the pending trades for 2 minutes, or I'm sorry, for 2 pip difference, right, up and down below, the channel is going to be smaller, but there is a chance that it's going to go whoosh, whoosh, activate both, and then, you're not really sure what the hell is going to go on, because as soon as the statistic releases, it shoots into one direction, and at that point, you're going to win one, and you're going to lose one. But if you win 92%, but if you lose 100. So you're actually going to lose 8% from that activity. So the pending trades for the graph is done when we're expecting a big movement, right? CPI, right? That's actually really, really, it's like one of the most important ones to kind of get an idea about the economical health. If we're spending, consumers are spending money, right? So that's very important. And usually we're expecting like 30 pips, right? 30, 40 pips, right? NFP is 40, 50 pips, right? So this is where 4 pips, that's not going to really matter. There's still going to be decent channel. It's going to shoot up. It's basically 10 pips. It shoots from here to here, and it has a chance to retrace back in the middle. But if it goes from here, whoosh, all right, for 50 pips, and then it retraces, chances are it's going to close higher or lower, right? Whoosh down and then retrace, and chances is going to kind of finish in the money. That's why you can't do pending trades by asset, whenever whenever, just randomly. It has to be done during specific moments. and specific time frames, things like that. So once again, we're going to be doing the macro statistics of importance every single month, every single time they come out, right? That's why we're actually going to go through with them with you in the beginning of the week during these videos, and we're going to essentially highlight them in our Telegram channel once more people kind of start joining there. We will be giving signals. This is something that's possible, but as I keep mentioning, signals is just a technical analysis that's done um, whenever you sit in front of a computer, right? All right, so German flash manufacturing PMIs, right? So we just had, right? That's actually another proof that these videos are not scripted, or they're not pre-recorded. This is what's happening now across two boards. You can click on Pocket Option link right now and see this graph: euro dollar, real market, 1 minute candles. And actually, we don't need any kind of indicators to take advantage of these things because we understand that when somebody opens positions, they're buying. If they're buying, the value of things goes up because demand rises and the supply becomes smaller. Now, when supply becomes smaller, demand rises, the value goes up. But as soon as positions are closed, right, it's the opposite effect. Closed is selling, right? Boom, you made your money. You're like, I'm good. 9 pips, that's like $900, with one standard lot in Forex, right? So yeah, somebody made. Wait a second. What did I say? 9 pips, $90, right? That's not. Sorry, not $900. Not each pip is valued about $10 in euro dollar, right? Maybe a little bit less, but the point is that's about $10. And somebody opened the standard lot, and they're like, "Oh, pew! I opened the standard lot. I made $90. That's good." And then closed. If you got several, maybe you opened 10 standard lots. All right, so that would actually be a very big investment, but you would also kind of multiply the 90 times 10. So essentially, you would make $900 and say, hey, that's enough for me for now, because in 15 minutes we got it again, right? We're going to do it again. And in German manufacturing services PMIs, it's usually a little bit bigger because once again the economy usually is bigger. Though with all of the sanctions, the geopolitical kind of nonsense that's going on between Europe, Russia, America, all of this, it's impacting German economy so badly that I don't know, I would say that the originator of internal combustion engine, the Mercedes, is no longer active in Germany. They left Germany, right? I think that they're building a new factory that's going to be building directly Mercedes in America by 2027, from what I read. They're building actually Chinese, certain, I think this was Beijing car company. If you open the hood, you'll see Mercedes-Benz badges everywhere, on the motor, on the panels, everywhere, right? So they're building everywhere else, but not in Germany. So I don't even know if Germany is number one economy in Eurozone. I think it still is, just based on the fact that it was. It still is because this situation with Eurozone and sanctions and Russian gas and everything like that is not really localized just to Germany. It's for entire Eurozone. So, anyways, so something to keep in mind. Now, what I said that I'm going to touch base on, very interesting, the volatility right before the release is justified, right? There we go, we got 5+ minutes. So the volatility, right? So we understand that right next candle there's going to be the release, for example, and right now there could be that little jerk into one direction, but then as soon as this statistic is released, it shoots into the other side. Now here's the thing. You're unable to open, even if you have the money. Let's say you're Elon Musk and you've decided to, I don't know, stupidly enough, put all of your finances into one position on in buying, in Forex, in the real market right before, and there's not enough asset to buy. See, there's still volume of certain amount of asset to buy. You can only buy euro dollar up to a particular amount in real market. So because there are already orders that are opened, right? Somebody the day before opened a forex position I don't know, for 2 days, right? They've done market analysis with 4 hour for daily charts, and they said, you know what? I believe the market is going to go into one direction for whatever, for whatever amount of time and distance. And so between that, though, we have the statistic. And certain banks are realizing, hey, out of, let's say, round it up, out of 1,000 orders, there is 750 that they can buy, but they want to buy more. Right? So what they would be able to do is throw a little bit of money into the, well, a lot of money by our standards, a lot of money by, a little money by their standards, but throw a lot of money into a different direction, right before. So there is a stop loss, take profit kind of scenario, right? When you open the position for a downward movement, right? You're saying that, hey, if it goes into the usually it's called trailing stop loss. If it goes, by 10% into a different direction, I want you to close it, and I'll still be in profit. But it's not going to be like, I opened here, it goes do 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 do, but then whoop, and then it closes you in the loss. So there is a trailing stop loss, basically says that 10% from your current position that you start making money, 10% that it retraces back, it closes, that you're still in the profit, but it means that there's going to be more volume of positions, right, available for you to open positions. So if there is like, 500, let's say, by volume positions that you're able to open, but you want to open for 700, and what that means is that you throw some money into a different direction. There is that whoosh, a momentarily movement into the opposite direction that closes a few of these stop losses, and then this volume becomes more available for you to purchase into a different direction. So again, just checking in that we still got time, 2 more minutes or so. So if there is a long-term position, it usually has a certain stop loss. This is something that's available to us through different, platforms, through different way of analysis. And what you're able to do is a couple of seconds before the release of a statistic that you're expecting to make money with, you're able to throw some money into one direction, close a few of these stop losses, the volume becomes more available, you buy a lot more, and through that same small movement or medium movement or large movement, you make more profit. Right? This is something that happens in the real market. That's why we're looking at Eurodollar. Today we're looking at the real market. We're looking at manufacturing and services PMIs. If anybody is joining us right now, we've just made a little bit of money, like $10 on in 1 minute, and we're looking to repeat the process right now. As I mentioned, you don't need any kind of indicators, right? We're going to hide all of this because that really doesn't matter. There we go, close all of this. And in 1 minute and 30 seconds from now, there it is, 30 seconds. And, so basically when this candle closes, next one will close. And on the one after, there's going to be an impulse. We don't know where that impulse is going to go. We don't, but we don't need to know this, right? What we need to understand is after the impulse, there's going to be a retracement. Why? Because people are going to be cashing out their profit. That's it. As simple as that. Right, so you don't need any kind of yeah. All right, so there's still going to be, right, so it's still going to be impulse. There we go. At the end of this minute, we're going to see this reaction. All right, and that's kind of like really cool, in my opinion, because this what allows you, no matter where you are, if you're right now standing at a cashier's line, waiting to be checked out, pull up your phone, right? You don't need to do any kind of technical analysis. Set up proper money management. You know what? On this one, I'll probably even increase the money a little bit, right? Let's go for 20 as the first step martingale because we're expecting a little bit bigger movement. There we go, 18 seconds. There it is, right? So 18, 17, 16, 15, or we can actually do a countdown. And as soon as it shoots up, I'm going to be, opening the position for a retracement. 6, 5, 4. There's a little bit of volatility already. 2, 1, and boom! All right, let's open one here. Let's go immediately for a 40, right, for a second step martingale in case it goes higher still. Wow, good volatility, good volatility. All right, let's see what the heck is going on. All right. Let's take a peek. All right, we got German manufacturing PMI. It was bigger. It was good. Good to see. There was bad news here. That's why it went down. There's good news for services. Let's take a look what's Germany, and a little bit better for manufacturing. All right, so there we go. So how freaking awesome is this? Really, I'm like always giddy with excitement to understand that, hey, this is what we're talking about. So in about 15 seconds or so, if this closes lower, which it should, we should be making money. Usually this happens in the first minute, and the retracement. All right, it's kind of playing a little bit close. There we go. All right, so spike, retracement, continuation. So this is actually good news, right? So even though we're talking about difference of very, very little, right, in several points, but we need to, kind of take a look at. Oh, it doesn't give us right now. Maybe there's some sort of issue with. Yeah, there's an issue with Forex calendar, but when you click here, you should be able to see a history of this kind of statistic. And you understand that it doesn't hop usually by entire points. It usually hops by by tenths of points, or maybe if it's a point, it's already kind of important enough for statistics. So it is good. It is good. So good news, or so bad news for France. Good news. Once again, this has to do something, certain things with geopolitical kind of things. I think that recently, right, maybe like at the end of last year or so, France was hired by, I want to say Australia. I'm not really sure. I think by Australia. Correct me if I'm wrong. To build submarines, to build nuclear submarines for Australia. And that was a big contract, right? It would have been lots and lots of money, lots of workspace, or work positions available to pay salaries to people who would be spending money. So this contract was very big. I think they wanted like 4 or 5 or something like that nuclear submarines. And we understand there's going to be billions of dollars, transferred, and this would have been trickling down in the economy. But at the kind of like at the last minute, United States convinced Australia to give that contract to them. So, these kind of things have like long-term, of course, long-term, repercussions, but these are the kind of things that maybe you want to keep an eye out and kind of, monitor in the macro statistics. So we see that services and PMIs in France are not so good, right? And I think that, yeah, we don't see the history here. But in Germany, maybe there's certain, certain things that were, I don't know, undertaken that there was good news, right? So we got, so this was a French manufacturer, but remember it opened with the gap. So it went whoosh, and then it started retracing immediately. That's why we see green candle here, even though it was a bad statistic, just the retracement was massive, right? So retracement here was like 100%, maybe a little bit more even, because it opened somewhere here, and then, kind of like fluctuated, but then retraced up to this point right here. Here also opened with the gap. So anyways, but here we got, yeah, there we go, we spike and a retracement. So even though this is good news, as I mentioned, it's not, because of the geopolitical kind of situation in the real market, maybe this is a good, kind of good sign, but it's not something that fixes the entire economy. So it does show that there is a little bit more demand for a little bit more demand for the services and manufacturing services from Germany. All right, so which is really cool. All right, in half an hour we're going to see from the entire eurozone, but as I mentioned before, this is not something that is as impactful. So I'm going to go, for in this case I'm going to go probably with like $5 because uh, how many, so out of dozens of countries in Eurozone, we got Germany and France as the first and second strongest economies, but we also have, economies that are not doing so good. Like, I think, this might be a little biased, not biased, but outdated information. But something like Greece, Greece is not really also kind of like active in terms of exports within, like I'm talking about olives or maybe wine, but it's not really something that is as in demand as like oil, natural gas, wood, right? So Greece being a small, essentially small country, not doing so hot. because wine and cheese and olives would be great when the economy is great, my salary is awesome, and I would indulge in such wonderful tasting, kind of treats. But when the economy is not doing so good, I think I'm going to skip that in lieu of a chicken and some, I don't know, macaronis, and keep it there. All right, so having said that, we're going to still kind of take a look, because if the statistic is going to be shockingly good or bad, yeah, we're still going to see a reaction. Now, while we're waiting, right, let's say, kind of take a, let's go back here just in case. It's still going to be in euro dollar. And remember that, wait a second. So we're going to take advantage of 11. We're going to kind of do a little bit of technical analysis trading, but we're actually going to hit up the AI button today. In 11:30 GBP. GBP is what? You're absolutely right. The most volatile of all currencies in the market, because again, it also kind of has to do with the fact that all of its eggs are in one basket, which is banks and commissions that they charge when crazy amount of money moves between countries. If China wanted to buy 100 million barrels of oil from the Saudis, from Saudi Arabia, or right from I don't know, whatever. So from the sheikhs, they would have to move the money through the banks, through the SWIFT system, through the banks in Britain, and those guys would get to keep, even 10% of something so massive, or just kind of rounding out, generally understanding, they keep the commission, and that's a lot of money. But if China now buys directly from the Saudi Arabia with cryptocurrency, or with their own currency, right, instead of the dollars, avoiding, bypassing the SWIFT system, that means British are not really feeling the benefit of that. So the economy over there is, going to be a little bit more strained if people are not using this, right? So something worth keeping in mind, and so that's what makes, it's believed, generally believed, that's what makes GBP the most volatile of currencies. So this particular statistic could be actually quite noticeable. The impulse could be also 15, 20 pips versus French, where it was 10. And wait, what was it for Germany? We didn't calculate. All right, so France was about 10 pips, right? 14.95. And this one was 15.05. Well, 10 pips as well, right? So it was 10 pips here, it was 10 pips here. So I do expect British to be a little bit bigger. And so we'll see. But that's exactly what we're going to be waiting for. Again, if anybody is joining us right now, understand that what we're doing right now, we're making a little bit of money together. This is something that is not pre-recorded. There is a countdown in the, in the Forex calendar that you see right here. If you click on pocket option link below, you actually get massive benefits if you click on that link than versus registering yourself. Something that I can explain to you one-on-one in Telegram channel. If you touch base, I can even ensure you're trading against losses, right? So something that we can discuss one-on-one. So touch base. Certainly will clarify any kind of questions you have. I usually say that pocket option and binary options is a great instrument for a part-time income, where but you can also take it into a full-time kind of salary, though it's different kind of you need different mental fortitude for that. It's still something that's possible, but it's also something that, also something that we need to, take into consideration. When you got no money coming in, but you need it, right? And you're forced to take positions even when there might not be a reason for it. And that's what's dangerous about this, right? Just because you can open, well, theoretically, 12 positions per minute. No, wait, 5-second expirations, 5 times. Yeah, 12 positions per minute. It doesn't mean that you should, right? Once again, we do have, if in the OTC, right, if we take a look, we do have the ability to open expiration for 5 seconds, right? So that means in 1 minute, there's, 12 positions that you could take. So this gives you with like 92%, this gives you massive, massive freaking, probability for success, but it also, kind of opens you for that risk. So when you have to make money and like this is the only way that you get money, it's different kind of psychological pressure. So anyways, having said that, all right, we're still in that, yeah, we're going to be in the countdown, and we're waiting for the GBP, oh, I'm sorry, the euro to react at 11 o'clock. So we got, quite some time, 20 minutes. But coming back to what I said, this is usually something that at the end of the month, if you make like $5 here, $10 there, $20, $30 each day, or 20-30% each day, believe me, at the end of the month, it adds up to something quite wonderful and beautiful. And if you withdraw smart, right, withdraw part of your profits, don't withdraw the entire amount because it lowers risk. The bigger your balance is, the lower the risk. I usually don't keep it higher than like 35. The reason for that is that imagine if I had $100,000 balance on my account and I would not open a position for $1,000. I would never do that, right? I still trade understanding that there's no guarantee to any position, right? So what would happen is that I would trade with still $5, $10, $20. Sometimes if there's like an NFP or CPI, like I did in the previous week, or interest rate decision, I would open with like $100 or $200 because once again, historically speaking, statistically speaking, I'm very confident in the situation that's developing. But usually technical analysis I do with like $5, $10, $20. That means that I'm engaging with my proper money management. I'm engaging maybe 3, 4,000 in one day, which means that if I do that with $100,000 balance, I have like 95,000 or 7,000 dollars that just sits there and is not working for me. This is stupid, right? So I don't really need that. So that's why I would take out, I don't know, like, 70,000, and I would buy an apartment somewhere where somebody is renting it from me and is giving me money coming in. So that's why I keep saying that this is a great instrument, a fantastic instrument as a side income for while you're, kind of doing your job. As I mentioned, you don't need a lot of time, just like what I've proven right now. What you get, able to do is just, I don't know, hit up, go to the water break or something, go to the bathroom, quickly bang out this retracement, go back to work, and at that day you have extra, I don't know, 20, 30, 40, $50. Right? The following day, you do something the same. At the end of the month, you're looking at a couple of $100 of extra cash that you can close a loan a little bit quicker, right? You can, I don't know, save up in a few months and you'll be able to, make a down payment on an apartment, right? Somewhere near you. Put people in there, have them pay off the minimum payment, and every single month you're building equity in your apartment. All right. So on the following month, you pay that off sooner, and now it just gives you profit. You do that, you rinse and repeat, right? Then you do it again, save enough for a down payment, and now you have that apartment and the new one, and paying off the new one. Put somebody in there, and now you have two apartments in matter of like I don't know a year perhaps. You see, if you're stretch this into factoring in the concept of time, it really, this is where it makes sense. If you're thinking that, hey, I got like, I don't know, $80,000 worth of debt, I got $100 that I can put on pocket option. If you have delusion, or I don't know, the gung ho to think that this $100 will turn into 80,000 in a week, this is not trading. This is not investing. This is gambling. And you know what? It could happen, but it usually doesn't. Right? When you take big chances, when you take big risks, even with like, you have to go with like aggressive martingaling, sometimes the market will do something goofy and you're going to lose it. So this is where people have maybe a little bit of negative, oh no, they crossed them, I don't know, whatever, binary options. No, no. No, it's not the instrument's fault. It's really how you use it and what you're expecting from it. Right? I usually say, hey, this is like building financial independence is like building a house. You need all sorts of instruments. It doesn't matter if you love hammer, you can't build the entire house using just a hammer. Right? But it's definitely the instrument that should be in your arsenal, to build a house. So, anyways, now I did mention the volatility before the release of any statistic, right? So there is a limited amount of asset that you can buy. Usually there's a small part of it that's already engaged with stop losses. And if that drops and you realize that, hey, I want to buy more, banks, investment banks or mutual, kind of fund, not mutual funds, investment banks or just rich people, CPAs, certified public advisors, things like that, they might use some of this money to open into the opposite direction to trigger some stop losses where positions would close, the volume would become a little bit more, and they would be able to buy more into that direction and make more money. So that's why sometimes right before the release of statistic, like 5, 6 seconds before, you'll see whoosh, 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 kind of like this tug of war so this computers, they do this. This isn't like somebody clicking buttons really quickly. This system does this, but that's why you see that. All right, so that's why it's present and relevant. All right, so we still okay. 11 o'clock. I don't know why I keep jumping over there. So we got like 14 minutes to that for that to happen. And now I think it would be a good idea for us to talk about this big, I don't know, blue button here, the AI trading. Now for this, I'm definitely going to go small. Here's the benefit of AI. It doesn't have your emotions. It doesn't have your nail biting experience or boredom, right? It opens, right? It calculates all of the indicators. It calculates all of the expirations, and when you click on that button, it opens a position with the highest probability for success. The negative part of AI is that the highest probability for success at that moment when you click that button could be like 10%. Right? So so this is where I usually beat AI, right, on that button right there. I usually beat AI because I can wait until the probability is a bit higher for success. So what we've done in the past couple of videos, we've got very familiar with fractals, with parabolic SAR, I don't know, with super trend. Well, we've done envelopes. This is like flexible support and resistance levels. But let's kind of we've got familiar with shaft trend cycle. We've got accelerator oscillator, right? And yeah, I think that's good enough. Right now, there's a crossing of the zero line. The downward movement was here for a while, so I do expect a bit of a short, maybe a retracement and upward trend. But if we set up support and resistance levels, and the reason why we're doing this in OTC, as I constantly keep reminding you guys, um, OTC is fantastic for technical analysis. Fundamental analysis is done obviously in the real market because there is a fundamental reason why lots of people would buy and sell an asset. But there's no fundamental. I mean, we're looking at the chart here. We look at the chart. It's totally different, right? Because in OTC, it's our clients, right? Pocket option clients that are buying and selling, affecting the value of this price. So there we go. We got the reverse crossing of the zero line right now, so we can actually have a downward movement. But if I click a button right now, look, it actually opened the position for 30 seconds. I usually don't open position for 30 seconds. I usually open it till the end of the minute. But it says it is going to go down in the next 20 seconds. So if we, engage martingale, and actually let me make sure that I open my table here so that I understand. So 1.5 is going to be, so if we lose in like 1 second before, there we go, I'll click AI again for $1.50. We did lose All right, so it opened it for a minute now. We did lose $1. We're going to $1.50 now. And this means that the next position is going to be 375, right? So we're going to continue, but I'm not going to go higher than 375. Can AI give you 5, 6 negative signals in a row? Yes, it can. But that's why we're going to kind of, there we go, I lost again, click in one more time. But that's why I'm going to cut it off at the third step martingale. That's very important because, once again, statistically speaking, time-wise speaking, it should give you that, opportunity to make that back, as long as you don't spend too much of it all at once. All right, wait, did we win? What happened? Okay, wait a second. Wait. Yeah, okay, so we won. There we go. So we're going back to $1. And there we go. You click again, and it says down for okay, once again, 1 minute. Usually, it can actually open for like 5 seconds. Once again, not something that I usually do personally, but remember, please remember, I'm not selling you a trick here. I'm explaining the general rule of how this works, right? It's like I'm teaching you how to drive. I'm teaching you the rules. How you will drive, aggressive, it's going to be up to you, but based on logical understanding of how your statistics work, you can, so if your statistics are great with 5 seconds, the hell with my reluctance to trade with this particular time frame. It doesn't matter. Trade with 5 seconds as long as you're doing this properly. All right, so wait a second. Am I going to win or lose this? I don't even know. Again, what did it? It didn't really retrace. All right, so I didn't win or lose. All right, so again, let's push AI. All right, so next one is 150. This one, it's still doing it for 1 minute. Look at that. I'm um I'm actually kind of shocked because it chooses the highest probability for. Oh, there we go. I won $1.92. Or I mean, wait a second. I won. No. All right, so it does. This is till the end of the candle. Wait a second. Somewhere in the settings, I mean, I think that we should be able to see the expiration itself, right? Because I didn't see. There we go. We made money on this one as well. Let's open again. And yeah, basically, I'm not seeing the expiration time. Well, there it is, but I don't see time to the expiration, right? So 5, okay. All right, 0, okay, there we go. So 1.5, open again. Right, next one is 375. I guess we need to be very vigilant about what's going on here. And as soon as it ends, we open another one. So we'll see if we make some money till the end of, okay, so there we go. We've made it here. Once again, going for $1. All right, so we've got at 11 o'clock, we got the European. All right, so in 7 minutes from now, so there should be a timer coming up soon. All right, there we go. So once again, remember that AI, it's a mathematical algorithm that computes all of the data on the mathematical level. Uh, Wait, did I win? No, I didn't. All right, so there we go, $1.50. So you apply proper martingaling, and you kind of get an idea. You kind of get an idea of that with the highest percent for success. Actually, right here, I would say that there is a support level or resistance level and support level that is still, quite active. Support level was good. Resistance level is not. Because it broke through on the third contact. So what we would do, we'd probably do something like this. We're still looking for a second point contact, and we might actually say that on this basis it kind of goes like this. So we got a little bit of a channel that's kind of going here. But it looks like we're going to lose this one, so we're opening that. And 5, 4, 3, 2, 1, and depending where it's going to close, because it could carry over into the next minute, and we could still be in the money, but we didn't. All right, second step martingale, and the biggest position that I would be able to afford is the third step. Okay, there we go. It's the third step martingale. It says actually it's going to be going down. See, it says that it's going to be going down, but I don't believe it. I actually think that it's going to go up based on shaft, based on crossing of the zero line, and based on the fact that it bounced away. There we go on this support level, right? This is a great support level. I would actually say that it's really good stuff. All right, so there we go. We got 5, 4, 3, 2, 1. Okay, again 150. See, here we lost quite a bit in a row, but it's wow. Okay, there we go. We're losing 6 times in a row now. Imagine if we had done the six-step martingale right now, we would be looking at $57, $57 investment. Right, so not something that I would advise. There we go. It won. So we've lost a bit of money, but we're in the limited loss right now. Actually, let's take a look. Do we have a countdown? Yeah, 3.5 minutes. We'll come back to this, but let's do a bit of analysis. Look, so all of these positions right now are AI, right? So we lost, we won. We won 345, but we lost 250. All right, so we've made like $1 here. We didn't lose any money here. We didn't win. Okay, we won, we won. We lost second step martingale. We won. We're back in the green. We won, we lost, we won. We lost, we lost, we lost. And here's the thing. Let's actually do a little, just very quick math here. All right, so okay, so 250, right? 250 plus 375. That is $6.25, right? So at this point right here, we lost 625. Then we lost another, right? We're going to add another 250, right? And altogether, we lost $8.75 here. But we won on this one, so we're taking, essentially, minus 375, and that equals that right now we're $5 in the loss, right? And this was like at the zero line. All right, so there we go. So we're $5 in the loss from this point right here, $5 in the loss. But if we take a look at the profit that we've made so far, right, we probably will be a little bit, better off, right? So up to this point, if we calculate, so here we've won only 38 cents. Here it's 92, so we're talking about over $1. Here we got 38 cents, right? So here over $1. I'm sorry, dollar, dollar. So we're already looking at around $5 worth of profit. So we're actually somewhere in the zero right now with regards to AI trading. But if you would have gone 6 steps in a row, right? So technically, is this worth the risk? Look, we had 1, 2, 3, 4, 5 on the sixth step. On the sixth step of martingale, you start with $1. And on the sixth step of martingale, you're already investing $57. That's crazy. That's a lot. If you would have lost it at that point, you lost $95, starting with $1. And that's the scary part for me. So I would much rather close. I would much rather close the position. Limit my losses to like $5 instead of 95. Right. So, but actually, right now we're in the zero, so we can continue until we go to the next event. We got like 54 seconds right now till the European Manufacturing and Services PMI. But for half an hour after, you and I are going to open a lot of positions, and we're going to calculate the results and see if today AI will, be the, I don't know, the victor. All right, since this is European Manufacturing and Services PMI, as I mentioned, there's a reason why it's yellow, a medium impact event, because we got a mixture of strong economies and weak economies in the Eurozone. And even if some of them are doing, if like 2 are doing great, 10 are doing crappy, this really doesn't, it's not a recipe for a high impulse they're going to dilute each other, right? So we got 3, 2, 1. Let's even see if there's going to be anything, right? So they're, well, I don't know. You see, nobody's really opening positions. Maybe they're waiting for the system to update. You see, we got a little bit of kind of a tug of war here, maybe short, jerky movements. Um, But yeah, I don't really see a reason to even open it, right? I mean, it's still pending on some in the, economic calendar. So it's obvious that big banks, right, and investment banks and, these mutual funds and, different CPAs, that they're not dumping a lot of money in here. We're still pending so maybe just regular people. There we go. All right. So 49.4. 49.6 was higher. It came out a little bit lower. I don't know. This is really not really anything stimulating. So there it is. There it is, my dear guy, my dear friends. What we need to understand is that we're not always gonna see an impulse, even from high impact events. There is such thing here that's called consumer confidence. CB consumer confidence was actually marked high impact event for quite a while, but it's kind of like, not not logical, because it's an opinion. It's an opinion of a regular person when they're asked how confident they are in their financial situation. So if they're confident in their next paycheck, they'll probably spend the one that they have now. But it's an opinion, and it's opinion, look, of 3,000 households in population of America of 380 plus million, right? What is 3,000? How many people, working people, are per household? Usually two, maybe three, right? So we're talking about 10,000, 6 to 10,000 people's opinion out of population of 380 plus million, or maybe even 90 million now. I didn't really look at my stats. So that's why this is not really an important enough statistic, even though it is important to the point that if consumer is confident based on this survey, that they're going to spend money. But this is not really something that is so um, impressive. It's not like, this is kind of like apple a day keeps the doctor away. Don't really believe that. You eat an apple a day, that's good, but it's certainly not make you invincible against diseases and certain situations. So, anyways, we need to keep that in mind. Last week on Friday, we did discuss the importance of this week, right? We got the CPI for Canada. Tomorrow we're going to do it at 3:30 with you guys instead of well, instead of this early like we did today. But today I definitely wanted to hit up this PMIs. But CPI is very important. It's probably one the most. So tomorrow for Canada, even though it's the second most, or I'm sorry, even though it's the economy that is neighboring United States, they're doing lots of trading between each other with Donald Trump playing tariff wars. This is something that, kind of tense situation right now, but still, it's very important statistic. And once again, this is usually something that we could expect like 15, 20 pip movement versus Germans and French like 10 pip movement like we did today. Because this is a PMI, this is a CPI. CPI is a little bit more weight to it. So we are expecting a little bit bigger. And this is when you and I are going to do a stream. I did mention that federal chair, basically this Jerome Powell, will be speaking about, maybe he's going to talk about interest rates, because America, if we take a look at previous week, United States did release their federal funds rate, and you and I made $700 here actually, but we see that United States kept the 4.5% interest already from December, right? From December of last year. So over half a year, it's been sticking to 4.5, and that's why I mentioned this time. This is why it's very important maybe to take a look at what he's going to be saying. What you can do is you click here, and there you can go to Federal Reserve. There's a link. It's going to transfer you to their site, and you might actually be able to hear that, what he says. if he tells about raising interest rates, if he talks about this, or if he has a hawkish tone, man, the fact that we kept it at 4.5% for the past half a year, we see no reason to change that because there's going to be, we see great results, we see growth, we see this. That's great. That's hawkish tone that could actually start moving the market for a couple of days. Because when he's going to be speaking, some people in like Asia are going to be already sleeping. They're going to wake up, they're going to hear this wonderful news, they're going to hop on the computer, open some positions because this is great news, and it could move for hours, maybe even days. The following day, though, we have another, right? So on Tuesday he's going to speak, and also is going to speak on Wednesday. This is where we need to be careful because he could be testing the market reaction of by saying something. Hey, you know what? Everything was fantastic. Da 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 da. He sees that there is a lackluster. Maybe the plan is to boost confidence in the dollar, and he's going to talk about with a great tone, and is going to be slightly reserved though, and he's going to see if the market goes a little bit. Then on the following day, he could really drop a bomb and say, "Hey, we're considering raising interest rates in like 2 months." Whoosh! Yeah, hell yeah. So there could be this testing of the market to feel how people are reacting. And he's going to be very careful about what kind of words he uses and what kind of tone he uses as well. He could say great thing, but say it in such a fashion where you'll be like, I don't know, was that good or bad? What's going on, right? And this is why it's kind of important to kind of keep an eye on what he says. There could be trend is your friend. In like 15, 20 minutes, you could make your 20, 30, 40% and be done, be done for a couple of days. I've shown you I've shown you this as well. 40% of your balance per day will turn $1,000 into over 20 million. But that also, remember that I keep saying that it's highly unlikely, even if you have $1 million, that you're going to open a position for 1% in each, as a starting point in martingale, because still in 6 steps you'll wipe out most of your balance. Right? So this is not really as easy. It sounds exciting, but it's probably not going to be happening just because of psychological trauma that you will face if you have $1 million and in 6 positions you lose all of it, right? So, and on Friday we got Canadian GDP, but I don't know. I think that we're gonna maybe skip that, or at least do a technical trading. Maybe take a look at it as it happens. So there. All right, let's continue. So we're kind of like up and well, I would say kind of down as well. $5. I think that we're somewhere in the zero. Once again, we're being spammed by in Twitch, we're being spammed. So let's see if I can contact my tech team uh, and tell them to remove this. All right. Anyways, let's. All right. Anyways, seems like yeah, my peeps are maybe on the break right now. But anyways, let's continue with what we've got here. Let's continue and see. 1 second. I think that's still nope, not that. All right. Anyways, all right. So we're going to trade. Now we actually have to go maybe to well, we're gonna go to GBP currency. Uh, let's see, 11, right, in 21 minutes, we're going to be expecting. Now, here's the thing. I'm going to cut off our stream at 11:30 right after the GBP. But in a couple of hours after this stream, we've got United States, obviously, the PMI services and manufacturing PMI. As I mentioned, obviously, this is something that's even more important because this is a biggest economy in the world. That's why we need to be aware of this. So, anyways, keep an eye out on this on your own. And right now, let's continue with. So we were $5. All right, yeah, I loaded $5 in for the European. I think it was here, right? Yeah, on this candle. There we go. This was European news. Oh, I'm sorry. Wait a second. I'm doing stupid things here. There we go. So 12 o'clock, or I'm sorry, 11 o'clock. Keep saying 12 o'clock. Okay, an hour in the future. So this was the candle for European as a whole. Uh, Services and manufacturing PMIs. So you can see that it's tiny. France was actually big. I was expecting Germany to be a bit bigger, but these two candles really stand out in the previous ones. Actually, for some reason, this was also a big candle here at 10 o'clock. Wait a second. 10 o'clock we got. All right, all right. So there we go. At 10 o'clock we had a member of the FOMC committee, certain Waller. He made a speech, and maybe throughout that particular moment there was a bit of reaction in the market. Maybe he was very buoyant, or actually very somber because this was for United States, and that's why I wish. I don't know. I don't think that that's really anything except for maybe certain people, buying aggressive positions because we got another candle here at 9:30 that was actually pretty decent. Right, we're talking about 15.12, and the lowest point it had was 15.03. So essentially, no, this is 9 pips. This is probably like 8 pips. There's your 10 pip movement. There's your 10 pip movement. So PMIs certainly give you a bit of reaction, but it's also not something that, um, not like 30, 40 pips like a CPI or NFPs. All right, so let's go back to technical analysis and let's continue with our AI. So let's see. There we go. 1 minute, and this one is. You know what? I'm thinking that what if I delete timer? See expiration time. It's not really showing. I don't know. I think that this is something a bit of a goof, or maybe I need to kind of hunt around in. All right, I lost. I need to hunt around in the settings somewhere to see the time till the expiration, not till the end of the candle. All right, so next one is 375, and we're already investing lots of money in this. All right, so we're $5. We're probably around zero, but right now we're going in the loss. All right, so there we go. This one's for a bit longer, right? Maybe like 15 or 20 or 30 seconds, probably a 30-second expiration. But this is it. I'm not gonna go higher than the third step martingale because it's just too damn aggressive. So we just need to maybe ride the train here and give it a little time. All right, there we go. $1.50. Essentially, we could go a little bit more aggressive multiplier to make back some of the losses. What, I'm still losing, right? All right, yeah, let's go. All right, this one is for 5 seconds, 375, and I lost that as well. See, there we go again. You see, it's indecisive. Right now, actually, I would have waited, but we got a bullish trend that's being met with a bit of resistance. All right, so we've made money. We're going back. And yeah, you know what? Let's go with the slightly more aggressive multiplier. So we're going to go 1, 2, 6. All right, seems like we're going to win this one, right? The entry point is relatively solid. There we go. So still AI. And because this opens sometimes for like 5 seconds, you do have, and yeah, right now actually I would be selling instead of buying. But so next position is for $2. Why selling? Because we got this happening right here with accelerator oscillator. We got this kind of meeting this resistance level. There is a bit of the new lowest low. So I'm thinking actually I'm going to open maybe a little bit sooner, maybe like 2-3 seconds before the expiration. There we go. I'm going to open. What did it open? It opened one for, oh, come on, remove. There we go. For a retracement. Okay. It's also likely, right? When the goes, kind of hits a new lowest low, there tends to be a bit of a retracement. All right, we're in the money, right? So there we go. Again, I would start selling now. Right, there it is. There's a one signal right now. Parabolic is going to go for a switch in a second. We got shaft rounding out. So at the end of this candle, we should, all right, we do have this kind of thing here going, right? A super resistance level, and this one is for 6. 6 is freaking a lot. And as I mentioned, I would be selling, but for about 30 seconds, from what it seems like based on this timer here, it says that it's still going to go up higher. Though we got both leading indicators inclining that it's going to be going lower. So let's see, maybe it's going to go lower, but in a little bit, right? We got a second point contact here that's available. All right, so there we go. We've made money. All right, let's go again with the dollar. All right, but this is once again 126 is very, very aggressive, man. There we go. Wait a second for 2, and let's open again for a downward movement. But well, let's see. All right, next one is for 6. All right, did I win? Yes, I did. Okay, so we won. We're kind of getting it back. So maybe I did discuss this with Henry and Donald, who are not with me today, unusually. But, whoa, $61 is not a good idea. Let's go to 1. Oh, no, I opened for $61? Oh, crap. Alright, so I might have actually put the entire freaking, the entire, progress that we've made today under threat. Alright, well, AI has come through. Jesus Christ. Alright. Please be careful. This is the kind of thing that can discombobulate your calm. All right, so we need to be aware of, got to be vigilant. My wife keeps saying that, man, you're, talking, can like talk and walk at the same time. And that's sometimes it's true, I think. I'm a little bit distracted. So I usually put on my smooth, jazz or techno trance, and I do a little bit of trading. Um, there we go. When I'm focused, when I'm not really distracted by, jumping between screens, looking at chats. And yeah, so we're coming back to the thought that I was trying to complete. I talked to all of my VIPs who work with me, who trade with me one-on-one. We discussed the possibility of trading in such a fashion where you start with a multiplier, especially if you're doing it in AI, to start with a multiplier like 1.3. And if you lose 3 in a row, you go to the next multiplier of 1.5. And if you lose that 3 in a row, statistically speaking, you're going to be making, on the 6th, on the 7th step, you should be making, bigger. So you either increase the multiplier or better yet to increase the first step. So if I lose 1.5, 375, I could start then with 2, and then with the higher multiplier, right, with the 3, and then again by a multiplier like, 2 and 3 is 5, 5 times 1.5, it's like 7.5. Right, so chances are there's going to be a little bit more, statistically speaking, probability where you make money. All right, what did we do? We win. We won on that one, so let's continue. All right, so this is where you could have several tiers of martingale, and you should never really go beyond like what you're shooting for at the end of the day. So if you're shooting for 10%, don't give your losses. Don't allow your losses to be higher than 10%. Right? So if you give yourself like 4 or 5 crappy days, yeah, there we go, 4 or 5 crappy days of 10% loss, you'll still have like 20 days where you had 10% profit, and it's going to equal out in your favor. You're still going to be in profit. All right, so now we go to 2. All right, this is 5 seconds. All right, I didn't lose or win 2, so we're still going for 2. This one's also for 5 seconds or so, right? 5, 4, 3, 2, all right, 10 seconds or something. All right, in the money. All right, now, so AI right now is on a roll. It's giving us some decent, statistics. And I think that it's time to go back. I think that we're back in profit again. So it's time to go back with slightly um, less aggressive martingale. All right, so let's take a look what we got actually for results. All right, 5, 4, 3, 2. All right, lost this. Let's go to 6 and AI one more time. See these tiny, the bodied candles don't really, understand. I would not be trading in this kind of volatility, though we do have a possibility, a higher possibility for an upward movement. But we do have a mixture of signals. We got parabolic down, but we got super trend on the bottom saying that it's going to go up. We got accelerator oscillator saying that it's going to, all right, so we're going to lose this. We're going to stick with, we're going to stick with aggressive martingale. So we'll do a little calculation in just a bit. All right, in the money. But I lost $9, right? So if I need to win 9 positions in a row with AI with first step martingale, so we're not going to win this one, for me to get that money back. So then, we could theoretically, let's see, if we're going to lose this, we're going to go again to 6. So if we lose this, we actually lost 6 positions in a row, right? Yeah. So this is where it's, that's the dangerous part with AI. I just lost 6 positions in a row. I lost $18. So now definitely I think I should start with a bigger position, but with a smaller multiplier. And let's actually get that. Let me get my table out here. First position, $5. Multiplier of 1.5. All right, so next one is 750. All right, let's see. So wow, we got 7 losing steps in a row, and so the one after 7 is 1875. All right, but we don't have to do that, so we're going back to $5, right? $5. All right, as the first step. All right, next one is 750. All right, but we didn't need that, so $5. There we go. Next one is 750. So this is kind of like fast shoot from the hip kind of trading that is done. And let's do a little bit of calculation actually for after, not something that I like doing. So the first step should have been $5. So we opened it for 750. Again, there's a bit of a goof. All right, so let's see. Next one should be 1875, but if the, not really. Actually, if the first step is wait. Got my. All right. Did we win? No, we didn't. Okay, so we didn't lose. 2 positions in a row. Didn't win or lose 2 positions in a row. One moment. Let me reload. Reload my table. All right. Let's do a little bit of not really something that you do. You always want to start with the proper first step, because here's the thing. Check it out. If I'll voice this, if you start with 1.5, the next position is with $5 and 1.5 multiplier, the next position is 750, and then it goes to 1875. But if you start with 750, next position is 1125, and the third step is 2813. So you're actually falling into a deeper, a much more aggressive trading than you maybe wanted. So the first step should always be exactly what you've calculated. So let's take a look. Let's kind of go back a little bit here, right? So because I kind of want to, for AI. So we talked that there we go, 375 right here somewhere. We've, man, actually, it's going to take a while to calculate AI goofiness. All right, but let's say, there we go. Yeah, we did this goofy thing right here. So we're definitely in profit overall, but this was a mistake. right? So it should have been $6 or no, actually, it should have been $1. But it turned out to be 61. I didn't delete, wasn't vigilant enough. But let's, all right, let's calculate here. So from this point, we got 92, 92, 92. Let's say that it's like 350 right here. We're going to round out. And at this point, we got, okay, so we lost $1. We didn't make any money. We won it also. 84 cents came back. So now we're talking about 450. 450 in profit as of this point right here. Let's lower it. 450 as of, yeah, 450 as of this point right here. Lost, all right, so we got 126, that's $9. So 450 minus, 9, 450 minus 9. So we're talking about 450. Let's talk about five or $4 here. So we're $4 in the hole. And this is where we lose another $9. So that's negative 13, right? As of this, let's kind of round other way. Nope, okay. All right, so $5, first $5, right? We're going, so first $5 minus 6, or what did I say? Oh man, I kind of lost my track. Okay, so $9 minus 6, all right, 15. So we got 20, and here we got 20 minus, okay, so we're back down to about minus 12. We've got minus, let's say minus 12, minus 8, a little bit less, minus 7. And yeah, so we're currently around, we're still around zero actually, right? With like $5 that we've made. I think we're around zero, but around $5 lost perhaps. That's why we're going to continue to go a little bit more aggressive with just a few more positions. Um, few more positions here. All right, so with this one, we should be in the money. That's why it's a little bit difficult to keep track of all of this immediately. There we go. All right, so now we should be around zero again. So we've been trading for quite some time. As I mentioned, I would have, there was a crossing here. I would have been doing selling here mostly, but I could say this was a loss, which means next one is 750. There we go. And I would say that I would be ready to set up another support level somewhere here and another resistance level somewhere here. So actually, I wouldn't have been opening any kind of positions until I see the market or the asset give me a signal. Right, next one is 1875, right? 18. Well, let's keep it at 18. That's fine. Still going to be in the money, but this one is losing. All right, one moment. All right, what do we got? What do we got? Okay, we got a buy. So again, going to where's my sheet? All right, so that's it. Going back again to $5 because we lost 8. So now we're like $20 in the loss, right? Again. So this is where the disadvantage maybe of AI because it does open but without any emotions, right? But based on calculations, but I can't really say in the moment where, what is the highest probability for success is at that point. See, it does look like ascending right-hand triangle, by the way. So I would say that it should be going upwards for a while. But see, it opened for a retracement for 5 seconds and I don't know. There we go. It seemed like we've won. Okay, let's go again. So now we're around like $10 in the loss, right? There we go. About $10 in the loss. It seems like it's still, there we go. This is maybe like a great way to go through trading volume bonus. Right? So most people, when they deposit money, they do it with a deposit bonus. And if you just need to get through trading volume, not really get into profit, maybe this is something that you could consider. There was a moment where you could get 150 percent depth bonus with like 35 trading volume, but I think that time is over. And well, something that we need to just be aware of that if you got certain plan, right, you deposited $1,000, you get $1,000 from the company with 100% debt bonus. You got to go through $50,000 worth of trading volume. So don't expect that to happen in like a day. This is something based on the plan, and something's going to take a while. Oh, we made it good. But this is where you don't really need to be in profit, or maybe even you can lose a little bit, because theoretically, think of this: if pocket option gives you $1,000 and you have to go through $50,000 worth of trading volume, let's just hypothetically imagine that you just trade into exact zero in 3 weeks, right? You go through this trading volume. Theoretically, you didn't trade into profit, but you still ended up in profit because you deposited 1,000, but you cleared with your trading volume, you cleared another K. What if you lose $200 over this period of time? Right? So you deposit 1,000, you get another 1,000 from the company, and in 3 weeks, throughout your trading, you trade in slight loss. You trade a lot, but you go into a slight loss and lose $200. You actually still made $800 worth of profit. That's why I love this platform. You don't even need to trade into profit to make money. All right, this is something that's super important. I do encourage everybody um, to think about this, right? To weigh the advantages and disadvantages. Hold on. Wait a second. Wait a second. Oh my God! Me and my big mouth. Did I? Ah, man. GBP. Oh man, GBP USD. Did it? Crying out loud. I don't know. I mean, yeah. Damn. All right. So I feel so goofy. God damn. All right, let's see. We got 64.4, 69, I mean 46.4, 46.9 came out of 47.7. It was a good statistic. Yeah, there was a spike. There it is, GBP USD, son of a gun. Oh, I can't believe I missed it. All right, so we understood that in euro dollar, we had 10 pip movement for German and flash manufacturing PMI, but let's see, we're calculating it open somewhere here. We got 34.31. The highest point was 34.45. So 31 to 45, down to a 14 pip movement, right? So a bigger reaction than in German or French manufacturing PMI. And as I kept saying, right? I mean, there's the proof, though unfortunately you and I didn't really take advantage of it. There was a spike, there was a retracement, so we should have been making money on this. We just missed it, just missed it, like literally by a minute. All right, so something that also 15, 20 pip movement is something that you, my dear friends, are able to catch at 4:45 p.m. GMT plus 3 times. So go on Forex calendar. This is the selectable kind of thing. You click here, you pick the right kind of time period for you, right? Mine just happens to be GMT plus 3, right? So you can put it here, GMT plus 3, and there it is. You're going to have it 4:45 United States manufacturing PMI for me. You put your own time zone, make some money. There's going to be a spike, there's going to be a retracement. If you have any kind of questions, comments, or concerns, once again, I would love to create this into a dialogue instead of a monologue. I show you on the daily basis, Monday through Friday, that we're quite capable of making money. I'm showing you what kind of instruments you have at your disposal, some of the things that you need to consider. We're talking about this in a very general way during these streams, but we go into details one-on-one when you want to trade. So, you guys, tomorrow, as I mentioned, we're going to take advantage at 3:30 GMT plus 3 time, much later than today. The usual time is at 3:30 or 4 o'clock when we talk about technical analysis or perhaps some fundamental analysis, because Canadian CPI, we're expecting 20, 25, 30 pip movement out of this sucker. So tomorrow we're going to try to do pending trades by the asset price, and we're going to do a retracement. Also, once again, we kind of covered a little bit of AI today. Really, really important to calculate the martingale, right? So today we did it once again, kind of wishy-washy. If you lose first three, you can go to the next step with a higher multiplier or higher first investment and lower multiplier, right? Nobody's stopping you to go from $1.150 multiplier, 1.5 multiplier to $2 and 1.3 multiplier, right? So this is where you need to calculate your statistics with AI, and also something that maybe you could do in demo account to get an idea what this is all about without risking your money, without taking unnecessary risk. But this is all about probabilities, right? All about probability of the next position being in the money. We can't really control AI because as soon as you open the button, it will open the highest probability for success, but if that probability for success could be like 10%, as I mentioned, instead of 50-50, where you and I do technical analysis, not really a strategy. You analyze the market because every single time it could be slightly different. But when you do analyze the market, you are able to make an educated decision, and this is something that helps you out with all of this. All right, so my dear friends, I will see you tomorrow at 3:20 GMT plus 3 to take advantage of Canadian CPI and still put some more money in your pocket. Thanks so much for watching. I'll see you all later.